Hello everyone. We are going to talk about loss of goods related transactions, few journal entry as in how to record transaction, how to record through journal entry the transactions in case of your goods are lost due to any reasons, due to any kind of mishap. If your goods are lost and it has not reached you, then what do we do? First, let's understand what is good reduction. So a person in Hyderabad had ordered few goods from a person B, who is residing in Mumbai. Now, B is sending after making those goods or after manufacturing those goods, B is sending those goods via, he can send it through train or plane or roadways or any way, right? So he's sending those goods. Now we are assuming, we are working under an assumption that all these goods are insured. All these goods are insured, whatever you're sending for. And what is the value of the goods? It is 10,000. All the four journal entries that we are going to see, or 4 to 5 journal entries that we are going to see today, we are working with the same example. A placed order for goods worth 10,000. Loss of goods on transit. Loss of goods on transit is rupees 4,000. 4,000 worth of goods is missing. By the time A got these goods in Hyderabad, he realized that 10,000 worth goods are not there. He is receiving only 6,000 worth goods. Then what happened to 4,000 and how will he record this 4,000 is what we are going to see here. Now on the way, same thing, on the way due to some mishap, all these things are damaged. And how do we account? How do we account for the same? What are the journal entries that we have to pass? So the next one says loss of goods. So whichever way goods are lost, it is a loss for the business. Your goods have reduced. Your goods, you asked for 10,000. You basically asked for 10,000 worth of goods, and right now you are receiving only how much? 6,000 worth of goods. And this 4,000 is a loss for you, is a loss for the business. So what are the things? Your goods are lost and it is an extra expenses as well. So the journal entry will be, the two things are loss of goods and reduction in goods. We never use the terminology goods in accountancy unless and until it is closing stock. So what is the general term we use? Purchases or sales. Purchases or sales according to situation. So here what, you place the order, you have purchased some items, hence the term that we will be using is purchases here. So loss by the journal entry that you will pass, as soon as you get to know about, guys, as soon as you get to know that this incident has happened, the journal entry that you're going to pass is loss of goods by, it can be either through, you will not write all the things together, you will see what is your situation. It can be through transit, that is during transport, or else damage is inside content, everything is damaged, or maybe a fire occurred during the transit time, or else maybe somebody just took off your goods and went, that is theft, right? So loss by theft or fire or damage as per the situation, whatever the situation is, long story short, it is going to be a loss for you. It is going to be a loss for you, and loss is a nominal account, and nominal account says, the rule of nominal account says that all expenses and losses are to be debited. That is the reason why we will debit this amount. Loss by theft or etc etc. What is the amount we will debit here? It is 4,000. 4,000 will be debited. Why are purchases credited? Purchases are credited because purchase is an asset. It is a real account. Goods are real account, and real account is, it is going out. Your goods are going out here. Your goods are going out, but you're not selling. Your goods are going out due to some mishap that has happened. That is why purchases account are credited. So the journal entry that you will pass as soon as you get to know about this incident is lost by theft to purchases, lost by theft etc etc to purchases, and the narration will be being goods lost during transit or fire or damage. Now, after passing this entry, let's see whether if goods are insured, what is the treatment? If goods are not insured, what is the treatment? Or if goods are only partly insured, what is the kind of what are the kind of treatments that we should be doing? First one is, if goods are fully insured, we are working on the assumption that all the goods are completely insured. Now in this case, the loss is borne by insurance company. Right now we said that it is actually a business loss. That is why we are, what are we doing here? It is a business loss, and that is the reason why we are debiting here. Loss by theft, fire, damage, transit, etc. It is a business loss. But if your goods are fully insured, it ceases to be an expense for the firm. It stops to be an expense for the firm. Why? Because firm does not have to put in any amount. Firm does not have to put in any money. Who will pay? Insurance company will pay. It is insurance company who is going to pay for the entire amount, guys. The entire 4K ceases to be your loss, and it will be whose loss? The insurance company is the one who will be paying for it. So as soon as you pass it, what is this entry? This entry is also called as a due entry. That is, an amount is due. You have given the claim to insurance company. So in this case, what is insurance company? Insurance company is a personal account. Insurance company is a personal account, and they are receiving the claim. They are receiving the claim, hence debited. Or through the other way, it will be considered as an asset, and it is an increase in asset. That is why it is debited. Two, loss by theft or fire, whatever your condition is. And why are we crediting this amount here? It ceases to be, it stops to be our expense. Before we consider it as an expense, now it stops to be our expense. That is why we are crediting it, crediting loss by whatever amount that is. Now insurance company, this will be shown in your balance sheet till you get it. Insurance company, as soon as you pass a claim, the next day they will not pay you. They will do their own verification. They will make sure that you're not fabricating the story. They will do their own checking everything. Once they are okay, or once they are satisfied that your claim amount is proper, then they will give you the amount. So for all this, it takes some time. There will be some time gap between the event happening and insurance company at last paying you. So till then this insurance amount or insurance claim amount will be shown in the balance sheet. It will be shown in the balance sheet asset side. All right, till you receive the claim. Now the next one is when the claim is received. At last, insurance company is all, they have checked, they are very satisfied with whatever documents you have shown. They know you have not fabricated the story, and at the end of it, they will pay you. So what is the entry? Bank. An asset is increasing, hence bank account debtor. To who is paying? It is insurance company who is paying the amount. And what is the amount? 4K. Insurance company will pay 4K, right, or 4,000. Now come to the next situation wherein goods are only partly insured. First situation was where goods are fully insured. 4,000 you will get. If you had insured the entire 10,000, suppose you had insured the entire 10,000, you will surely get whatever is lost, whatever amount is lost. But here, you insured only for, like, let's say 5% of it, or let's say 10% of it, etc. Anything. 10% of it only you have insured. So you have insured only to the extent of like 1,000 rupees. So now if you're giving the claim, how much do you think insurance people will pay you? They will pay you only 1,000. They will pay you only 1,000. So, and what is your claim? The actual damage is how much? Your actual damage is 4,000 rupees. And insurance company is paying you only 1,000 rupees. So what is the rest of it? The rest of it will be your business loss. The rest of the amount will be a business loss. It has to be borne by the business. It is not insurance company's responsibility. It is your responsibility. Hence, what does the narration read? The narration reads, being claimed partly admitted and balance amount considered as loss. Considered as loss and accounted for. That is the reason again why loss is this much amount is debited. Now the last one. So our journal entry once again. Insurance company account debtor, the amount, how much ever claim is admitted. PNL account debtor, this is a loss. PNL matlab, this is a loss here in this situation. Claim not admitted, it is a total loss for us now, and it has to be borne by the business. Two, loss or theft or etc etc, whatever your situation is. So the narration goes, being claimed partly admitted and balance amount is considered as loss. The last situation is when stock is not insured at all. We have not bothered. It is not insured at all. A and B were overconfident about the fact that nothing will happen to their stock. So, and they have not insured at all. Now what happens? The entire loss of 4,000 will be borne by the firm itself. It is firm's responsibility. The entire 4K is firm's responsibility right now. It is a loss for us. So in that situation, what we will do, profit and loss account debtor to loss by theft, damage, fire, etc. Whatever it is, whatever the reason is, the entire amount will be transferred to PNL account and transferred to PNL account. Whenever we are making trading in PNL, the entire amount will be transferred to PNL account as a loss. It's not an income, it is an expense for us. It is a loss, right? Thank you.